As we've been telling you, U.S. bank earnings season kicked off this morning with Goldman Sachs, J.P. Morgan, Wells Fargo beating expectations along with the Citi. But what could the U.S. bank earnings mean for Canadian financials? So let's find out from Dan Rohinton, portfolio manager at IA Global Asset Management. Good to see you again, Dan.
Good to see you.
All right, we'll get to the Canadian angle in just a second, but among J.P. Morgan, Goldman Sachs, and the big banks that came out today with their numbers, so what's the one thing that stood out for you?
I think generally speaking, the relatively benign rate of growth and provision for credit losses is something to really focus on. And then also slightly to take it on a bit of a negative angle is loan growth was relatively anemic for what you would expect for this point in the cycle. And that tends to mean that net interest margin did a lot more heavy lifting in driving up top line for the banks this quarter. So call it some puts and takes here and there.
Now, we know that some Canadian banks have had a rough go of it in the U.S. the last couple of years. TD is an obvious one. So how can these numbers and what it may mean for the economy translate to the Canadian banks?
So there's the first element that, you know, with the depreciation of the dollar in the last few months, there's a net benefit from FX translation. So that does provide a little bit of reprieve and a little bit of flexibility in the Canadian business, although this does tend to mean revert over time. The second point is it allows for a relative improvement in the US to offset anything that might happen in Canada, which is historically offset in the other direction, the weakness in the U.S. market over the last few years. So a more stable U.S. backdrop is generally speaking good for the Canadian banks, and that's why their valuations have been moving higher in recent months.
All right, Dan, now we're going to shift gears here. You have some industrial names for us, and we're going to start with some names. This isn't really an industrial, but a competitor to Thomson Reuters. Is it pronounced Relix or RELX?
It's tomato. Relix is what I usually go with.
Okay.
But I just wanted to give a flavor for what's possible in the industrial sector because it's not all metal bending, widgets, and distribution like that. So a company like Relix is really a journal business and a database business that's gone digital, and it has the benefit now of really being able to mine that deep data set the same way that domestic champion Thomson Reuters does as well. So what we like is a global duopoly like this that can really take part in every legal practices acceleration and optimization and take some of the profit for themselves at still what is a reasonable valuation for the growth profile that it offers.
All right, so that's that one. And do you recommend investors buy the American Depository Receipt, is the main listing in London? Am I right?
The main listing is in London but the business is globally diversified, so you can use the U.S. listing if you're constrained by where you can go geographically.
All right, and then TransDigm, an aftermarket parts supplier to the airline industry. What are the concerns here, if any, about the Department of Government Efficiency maybe hindering the business somehow?
So there's been basically what's happened over the last several years is the shortage by the airframers. So think of your Boeings and your Airbus and the global duopoly there. Their inability to really deliver planes to an aging fleet of aircraft around the world has meant that the aftermarket has to work harder. So that is the reason why there's a strong backdrop fundamentally. But tactically, what's happened more recently is that there's been outsized fears about the Department of Government Efficiency, DOGE as it's synonymously, as it's colloquially called. And the reason for that is TransDigm has a small defense business, and it's about 5% of earnings before interest, taxes, depreciation, and amortization, but it's had a bit of an outsized impact on the valuation. But we think those fears are overblown, so we've been adding to our position.
And you say this company has a winning formula. What is that?
Basically, you're spec'd into the next generation of planes. You're spec'd into the prior generation of planes. So wherever you're wearing a seatbelt, that's a TransDigm seatbelt, and the ability to push price through because you're sole source or dual source. So that type of ability to be low value parts but spec'd in for decades going forward allows you pricing power through what is basically replacement schedules that you know years in advance. So predictable cash flows, predictable growth at a valuation that's fair, and a capital allocation team that's basically bar none in the industry.
And your last idea here, Waste Connections. There's always Garbage, that is a constant. Waste is a constant. So what are some of the reasons that you like this one?
So you nailed it for the most part there. There's always garbage, there's always recycling, and increasingly more tactically, why I think it's interesting today and look forward on a go-forward basis is that because of the inflation that we've seen through the system, basically tonnage volumes have been going at the consistent rate they have. Landfills have been filling up at the consistent rate that they have, but they've had to basically price through outsized cost pressure that the waste companies have seen, including Waste Connections. And now they can hold on to the pricing as their costs come more in line. And there's other recycling projects and renewable natural gas projects that they can participate in. But although I would just downplay that a little bit because those are based on spec markets and merchant markets, but you have outsized growth drivers on top of what is, generally speaking, a consistent demand base and margins that are moving in an upward trajectory. So it's something to own today, but also something to keep an eye on 5 years in the future and even 10 years in the future.
All right, very good.